Oh, that was quick. 53 people.
All right, we'll give it a few more minutes for some people to join. All right, Kathy, I'd say maybe one more minute and then we could go ahead and get started. All right, Kathy, if you want to go ahead and kick it off, we can let some people join as we're starting. Good morning, everyone. Kathy, our partner, is going to introduce our panelists today. Thank you for joining our School Business Administrator Roundtable. Take it away, Kath.
Good morning, everyone. It's a beautiful day. I hope this is a great presentation. We were able to convince Cheryl Schneider, the School Business Administrator for Millburn Township Schools, to share her financials with us. And we just pulled a March report, and she has been wonderful. And so I want you all to be kind to your colleague, because we all get through to the end of the year and we see where we are. And this is a thinking process. We're using Cheryl as an example, and the intent is to have you thinking about what your situation might be. With us today, we have manager for Nisivoccia, Caitlin Janucci. Caitlin, give a wave. And of course, myself, I will be moderating throughout. So without further ado, I will let Caitlin start, and she and Cheryl will talk about the process that they went through to calculate year-end surplus, determine what the excess will be, or, you know, their estimates. So take it away.
All right, thank you, Kathy. So as mentioned, my name is Caitlin, and I am a manager at Nisivoccia. And today, for the first half of the presentation, I'm going to be joined by my client, Cheryl, who is the School Business Administrator in Millburn. And also, as Kathy mentioned, we're very thankful that she helped us with this project. You know, she was able to run us a ton of interim reports and just let us take a quick deep dive into her financials as of March. So the point of the first half of this presentation is to just give you a how to project your year-end surplus. And we broke that up into 4 easy steps. So I'm going to be doing a combination of sharing the PowerPoint, which will highlight each step, and then also transitioning over to an Excel spreadsheet, which is going to really get into the math behind the calculation. And after each step, I'm going to just pause and give Cheryl some time to instill some district wisdom into our presentation. So I guess we'll just jump right into it. So what better way to start than have a list of all the documents that you're going to need in order to do this projection. So starting off on our list is the budget. You're going to want to gather your current year budget, which for today's purpose is going to be your fiscal year 21 budget, and also your subsequent year budget, which is going to be your fiscal year 22. You're also going to need some accounting software documents, and for today's purpose, we're going to be focusing on CSI documents because that's the software package that Millburn utilizes. So Cheryl was able to run us an account totals detail revenue report and an expenditure report, which we're going to look at shortly. And we're also going to need some grant award schedules. So of the 3 that I listed here, as of today, the state aid payment schedule is really the only one that's going to be available. As most of you know, the extraordinary aid schedule and the non-public school transportation schedule, they typically come out in July. So since we're not really at year end right now, and the purpose of today's presentation is really just to do a projection, we're going to be using prior year grant awards just to get a good base, a good estimate for these grant awards. And you're going to just see this as pretty much a recurring theme throughout today's presentation, that because we're not at year end, there's certainly some actual numbers that we can use, but some of it was educated guesses where we think we're going to end at year end. We obviously haven't closed out yet, so it's going to be a mix and match of actual end estimates. And then just to round off our list, we have a catch-all other category. I would suggest having a prior year audit on hand and also access to your board minutes. As you're going to see, there's some board approvals that we're going to need to look into. All right, so I'm going to jump right into step 1, which I like to start by looking at the reserve activity. So when I talk about activity, I want to know what type of things came out of your reserves and what type of things came in. So typically going out, we're going to see withdrawals from the budget or board approved withdrawals. And usually these withdrawals are for designated projects. So I want to keep track of these projects. I want you to know what the status of these projects are at year end, because typically projects could come in under budget or parts of the projects could get canceled, and you might have unexpended funds from these projects that would essentially need to be returned to the reserves where they belong. So returning that money could actually be an addition back to your reserves. And another typical addition that you could see going back in would be interest earnings. So with those 3 points in mind, we're going to jump over to the Excel where we're going to talk about each of those steps. So this is just an analysis that I put together looking at the reserves. Milburn has a capital reserve, a maintenance reserve, and an emergency reserve. And as we go through each of these steps, there might be some areas that seem very redundant, but I'm just going to literally go through step A to B. So I want to start off with a good beginning balance. So I'm sure your accounting software did roll over properly and has accounted for any audit adjustments that your auditor might have made in the prior year. But just to be safe, I always like to look at the prior year audit. And while these reserve balances probably show up in multiple places, I like to just go straight to the last page of the C1, which if I scroll over, I have little snapshots so everyone can see what I'm talking about. So here's Milburn's last page of the C1 where there's the recapitulation. And as we can see, they ended in fiscal year 2020 with their capital reserve at 4.4 million, emergency at 450,000, and maintenance at 2.6 million. So if we scroll back over, that's where I'm starting out our reserve analysis. And then we're going to look at some withdrawals. So obviously the budgeted withdrawals are going to come straight from Milburn's fiscal year 21 budget. So if we scroll back over and we scroll down, I just took a little snapshot of the budget. You can see Milburn withdrew 800,000 from capital reserve and 250,000 from maintenance reserve. And then Milburn also had 2 different types of withdrawals by board approval. In fiscal year 21, they actually had a small loss in state aid of 392,000. And as I'm sure most of you are aware, there's several ways that you can account for that loss in state aid. And Milburn opted to do a withdrawal from maintenance reserve to offset that reduction in revenue. So this was their first approval of a withdrawal from maintenance. And then a little bit later on in the year, they also had another board approved withdrawal from maintenance reserve for a specific project. So for that, I have an example off to the side, just a simple paragraph in their board minutes from September authorizing that exact amount to come out of the reserve and the specific required maintenance account that it was going to. So of the withdrawals, Milburn actually between budgeted and board approved, they withdrew about 1.5 million. So when we were putting this analysis together, Cheryl and I were talking, what type of projects did this money go towards? How were the projects progressing? Cheryl talked to her facilities manager, got a good estimate of where they were going to end the year with these projects, and we decided that a reasonable amount of money to return back to the reserves for unexpended portions of these projects was about $61,000 to capital reserve and $59,000 to maintenance. So this is what I was referring to about before. This was really just our educated guess. Obviously, the year's not over yet. The project's not technically complete, but this is where we feel that the project will end. So we want to return this money to the reserve. And then also, in Melbourne, they specifically have a designated revenue line for interest earnings for capital reserve, which I know it looks a little tiny. We're only talking about $1,000 that we're putting into the reserve here, but as we all know, interest earnings pretty much got hit when COVID started, so that's partially why this amount is small. I know some districts might not have a designated revenue line for interest earnings for the reserve. So something I like to suggest doing if you do want to allocate some interest earnings to your reserve is just to take a look at the whole picture. So if you have a bank account that has general fund, special revenue fund, capital projects, debt service, maybe even an enterprise fund funneling into that one main account, and that balance is, let's say, $10 million at the end of the year, you know that that balance is made up of several different funds, and you can allocate the interest by each of those. So if your $10 million is made up, a quarter of it is made up with the reserve balance, it would be a reasonable estimate to maybe put a quarter of your interest earnings back to the reserve. So also, if you notice, I just left these yellow here, which is the whole point of our presentation and how to help you determine what amount of money at the year end in June that you want to put back into the reserve. So we're starting here with our presentation, but we're going to come full circle and end back on this spreadsheet and show you how Cheryl determined what she wants to put into her reserves. So before moving on to steps 2, I'm just going to let Cheryl briefly talk a little bit about this tab if she wants to share any of her input on our reasoning for anything that we just talked about for reserves.
Thank you, Caitlin. All I want to do is emphasize what Kathy said at the beginning, that this was an example of ways that we make determinations. This is going to be very different for every district. It's very political, both within a district and for even in a single district between different boards in terms of how they want to use reserve accounts. The capital and maintenance reserve here might look a little bit high to you. They are high for Melbourne also. We 2 years ago embarked on a referendum campaign that we called CAMP, Capital and Maintenance Plan, that looked at all of our maintenance and capital needs over years. Part of it went into the referendum, but there were other parts that we earmarked to be done through capital and maintenance reserve. So we've been building those reserve accounts in order to address specific projects. And you could see that when we had the budgeted withdrawal, that was very planned, that each year from capital reserve, we've got different projects that are planned to go into our budget. Maintenance reserve, again, using little bits of it, a little bit lower what you see budgeted there compared to other years, mainly because there's so many other projects taking place with our referendum right now. There was a capacity issue. And then, of course, we had that money available. And I know later in the presentation, they'll be talking about the different reserves, how they could be used. We were using maintenance reserve because it is one of the most readily accessible ways to get access to your funds. And so you could see that we took advantage of that. The 178 withdrawal was actually in response to COVID specific HVAC programs that we were moving forward with in the fall. It was before we had ESSER funds and other things available to help with that. But our board was very supportive of using those funds to address the needs as they were coming available. And you'll see it when we get to the later screens, that's the discussions that we have about now replenishing those funds as we go into next year. So again, just a reminder, you're seeing an example, but it's going to be different for every different district.
Right. And I'd like to add a little bit to that in a generic sense. As Cheryl alluded to, each district has its own political pressures, and you have your own way that you deal with the public. So the board has great responsibility, and whatever the mantra is, whatever message they're sending to the public, that's where you decide where you want these monies to be. How does the public interpret it? How do they understand what's the best foot forward for the district? So of course, we stepped over the fact that Milburn had money in emergency reserve and really don't see the need for it. You know that over the past 5-6 years, we've been talking about not really putting money in emergency reserve. Then they opened it up for security. And then with the pandemic, they opened it up further. But I know last year in a school district, the district wanted to put a lot of money into an emergency reserve for the COVID pandemic, and kind of got caught off guard. And thank God, you know, we're all teammates in this process. And so I have two partners that look at reports, and BA and I are going along, and we're like, yep, let's put the money in emergency reserve. And then it got kicked back from partner review and here saying you're exceeding the max. So we're going to touch on that a little bit too, but we're just going to try to gravitate through this. You're going to hear some statements said again and again, and I think that's good because that's reinforcement. Yeah, you don't just hear it once, you might hear it 2 or 3 times. So proceed, Caitlin, very good.
Okay, so now I'm going to flip us back to the PowerPoint, and we're going to go over step 2. So I like to move on to reviewing the expenditure activity here. So there are a few questions that I want to keep in mind when we flip back to our Excel spreadsheet, but when analyzing the expenditures, I really want to look at each separate column that populates in CSI, and I want to make sure they all seem reasonable. So I want to make sure to look at the transfer column. I want to make sure to look at the actual column and make sure that within that actual number, there are any applicable adjustments due to state aid, that those are all being accounted for. And then the most important thing to look at here is really just your encumbrances. So before year end comes about, you really want to be looking at what type of open liabilities are on your books. Are they all valid? It's really important to just review them because you don't want to be carrying something that should essentially be canceled. All right, so let's flip back to our Excel. And here we have our expenditure analysis. So to start us off on this portion of the analysis, I just want to look at where the expenditures are ending in CSI. So Cheryl ran us the account totals detail expenditure summary. And I know there's multiple ways to run this report. I'm sure there is a way to get like a full subtotal for 10, 11, and 12. But the way we ran it today was just a separate subtotal for each. So I took a screenshot of our Fund 10. And as you can see in CSI, we have a original budget column, our transfers that net to our adjusted budget. We have an expenditure column and an encumbrance column. So these key figures here, once we run the CSI report, we're going to extract those amounts and put them over here in our analysis. And then we're going to start to analyze each column. So for instance, does our budget column make sense? In total, in CSI, we have 97 million. If we take a screenshot of Milburn's budget, they have the 97.3 million. We want to remove these budgeted interest amounts. And once we do that, we exactly tie to what was entered in CSI. Again, typically the budget will be entered properly in your accounting software, but it's just one more checkbox that you can look at to make sure that everything is tying before you move on. I also like to look at the transfer column. Typically the largest amount that you're going to see here that's populating in the column is the prior year encumbrances. So for this, I do want to check back to our audited balance again. So we're going to flip to the last page in the C1, back to our recapitulation. There's going to be a year-end encumbrance amount. Milburn ended fiscal year 20 with 313,628 encumbrances. But if you notice, our transfer column has 773,000. So the difference between those encumbrances and this amount that's in CSI is 460,000, which if you recall from the tab we just went over with our reserves, we know that that's the board approved withdrawal that Milburn did coming out of maintenance reserve. So together, these two amounts exactly tied to the transfers that are in CSI. I feel comfortable with that amount. We can move forward and make sure the next column is reasonable. So for actuals, there are typically some adjustments that show up on the state aid payment schedule that you want to ensure that you're recording in CSI. So I took a screenshot of Milburn's payment schedule, and in blue here you can see that some adjustments that affect the district are debt service assessment for 76,000 and also commission for the blind for 19,000. There are several other adjustments that could be affecting your district, but just for today's purpose, since Milburn only has these two, we're just going to be focusing on these two adjustments. So when looking at Milburn CSI, the debt service assessment adjustment was already posted within these actual numbers, which is why we just noted here that that was not an adjustment that we had to further make to this analysis today. But the commission for the blind hadn't been posted yet. It's totally fine. You know, the year end isn't closed yet. This could be an adjustment that's typically made in June. But just to get the most actual number here, we do want to include all of the adjustments that we're aware of should be here. And then also encumbrances definitely look large right now. We're sitting on $32 million of an encumbrance. So this is again a conversation that Cheryl and I had. What is making up this number? What's the largest portion of this? And obviously it's recurring payroll expenses. So right now these CSI reports are frozen in time as of March 31st. That's still April, May, June that we have to get through, and some expenses that are sitting there that we know are going to occur before year end. So those large ticket items, after looking at it, we felt comfortable saying about 20 million of that was going to be either liquidated or moved into an accounts payable classification. So we moved 20 million out of encumbrances into actual. So again, just an estimate where we think we're going to end in June, but just to clean up those encumbrances a little bit more. Right now on this analysis, I know it looks like it doesn't make a huge impact that we're just moving it between columns, but as we get to step 4, you'll see that in calculating a portion of your fund balance projection, it's going to be using this actual amount. So you really want to get that as close as possible to where you think you're going to be in June. All right, so Cheryl, any insight you'd like to add for this tab?
Just first, I'll say, don't think that I'm going to have a $12 million encumbrance if that looks huge. Caitlin and I were discussing the fact that we were looking at March reports and then discussing April reports, and it's actually another 10 million will come down. So very quickly, it will come down to 2 million encumbrance going into the following year. But that would adjust all of our calculations on other sheets. So we left it the way it was for the presentation. So, you know, again, a snapshot right now, not where we're going to end up. What I'll say here is expenditures is something that I watch throughout the year, but really start to hone in really closely during my budget process and planning for the next year. In terms of the current year, I'll always have a number of projects that, like my buildings and grounds wants to do, some purchases technology wants to do, larger things that I ask them to hold off until later in the year to see where we're going with other expenditures in case there's emergencies or unanticipated expenses. And then come January, February, when we're getting ready for instance, with buildings and grounds for February break to take advantage of empty buildings, or April break, and then certainly the end of June before the summer, that's when we'll start to have the discussions if we're comfortable moving forward with those bigger projects. So that's why you'll see some of those larger encumbrances this time of year, because we're really moving forward on some of those bigger projects. But I'm already at that point starting to look at what you'll see in 2 more tabs, what that bottom line is going to look like, so that I could decide what to do with current year expenditures, but even some of the budget requests that we have for the following year. Lots of times we get budget requests that are really current needs, but it's what's on everybody's wish list at that point. Also, somebody might be looking to buy, for instance, new smart boards, technology in the next year's budget. As we're balancing the next year's budget, if I have money in the current year budget and they can replace that equipment and take advantage of it sooner, we sometimes will take advantage and do that in the current years. And again, it becomes that whole political discussion of what your bottom line is going to look like and what you're putting into reserve accounts and how much you have in excess when you get to the final number. So I'm constantly watching those expenditures and what's the unexpended portion of it so that I can figure out where I'm going to end up on June 30th. So it's a constant thing. It's not something that you should leave until June to first look at, because if there's something you want to take advantage of currently, you can't be deciding it on June 30th. You want it to be for the current year. And so you need to start to take advantage sooner than at the end of the year.
Okay, I know that when you're preparing your budget in the February time zone, auditors are saying, you know, you should be looking already at how you're going to close out June. And there's so much that happens in that period of time. And so to ask Cheryl for the March report, knowing full well 3 months closing out purchase orders is a big window and it's a big number. But if you look at the 31 million in relation to the budget, it's not. We have 3 months left to go. But the critical things, in addition to what Cheryl explained that's situational to each district, is that some districts monitor and adjust their payroll purchase order throughout the year. Some might do it periodically, and some might just do it once when they're going through the cleanup phase. So that's very critical. In Milburn, I think they have their payroll pretty much nailed down. They don't think there's a lot of play in that number. And, you know, there could be some year-end accruals. So you have to take that into consideration. And then long history of auditing school districts. I had a school district that was closing out purchase orders. We were going to meet with finance. At the beginning of June, we projected fund balance, and 2 weeks later, the number had changed by a significant amount. And so we're looking at a $65 million budget, and it changed by $1 million. So percentage-wise, not a big number. And somebody on the finance committee said, wow, how did these numbers change by $1 million in 2 weeks' time? And so we used the process of elimination, and we said, I just finally said, it can only be the closeout of purchase orders. And the BA didn't really think so. And when she started pulling up purchase order numbers, she was seeing that they were being closed out and canceled. So it's very critical to your actual calculation. So if you are doing this too early before you do it, your number is probably going to change significantly. So we were trying to get a little bit closer to what we think it will be, and there still could be a fairly large differential in here that will be managed. I think that's all I had to say about that. But I'm going to take one step back. We went over the revenues in Milburn, and so when we were talking to Cheryl about whether there would be any significant revenues coming in the months of April, May, and June. And of course, we looked at her April report because we were working from March. And last week I said, any chance you have April? And she's like, yep, it's on my desk. So by the 10th day of May, she was sending us her April report, and we were able to see the difference in the revenues, which were not very much at all. It was maybe 20, 30,000 difference between March and April. And then the expenses, of course, changed by 10 million. But if you have fees that you're charging, so in the past, Milburn has had subscription busing. Obviously, with the pandemic, that didn't happen. But some of you are billing tuitions and such, so you might have to give revenue a bigger consideration than we had to in Milburn, because we really don't have much outside of district taxes and state aid, and any of the real miscellaneous revenues had already been captured by this time. So that's it. Thank you.
Okay.
I stepped ahead, right? You
did. You stole my thunder. Step 3 is revenue. Just kidding. It's fine. So what Kathy just mentioned is what I was going to talk about. So
I'm so sorry.
No, don't worry about it. We'll breeze over step 3. It's all good. So step 3 is revenue. So once we feel good about our expenditures, we want to do that same analysis to our revenue process. So where we were looking at open liabilities for expenditures, we just want to look at any type of open receivables and make sure we're capturing all of that on the revenue side. So I like to look and make sure that our receivables related to grants are being accounted for. And as Kathy mentioned before, if your district has any type of billing. So typically pre-COVID, Melbourne had subscription billing, there could be tuition billing, any type of billing, you just want to make sure that those receivables are also being captured. So with that in mind, we'll flip back to our Excel. And our revenue analysis is going to look pretty similar to how the expenditure one was structured. We want to start with our account totals detail revenue summary report from CSI. We want to see where we're ending and grab those year-to-date numbers. So typical, or very similar to the expenditure layout, we have a budget column that we want to grab this number from, and our actual column, the 93 million. So we're going to bring those amounts over, and then we're going to start looking at some of those revenue sources and make sure that our receivables are being captured. So as I mentioned before, the extraordinary aid and transportation grant award schedules are not out yet. So we're just going to be using last year's grant awards. So for this purpose, I just took a screenshot of the extraordinary aid. So last year in fiscal year 20, Melbourne had $882,000 coming in from extraordinary aid. So for this purpose, we're going to assume that their fiscal year 21 grant award was also that same amount. So right now in CSI, they had about up here 588,000 of extraordinary aid revenue booked right now. So the difference between that award of the 800,000 and what's already booked in CSI, this 293, we're just going to make an adjustment for it. We're going to account for that grant receivable. And similar to transportation aid, they had nothing budgeted. So we're going to assume the fiscal year 21 grant award was the same in prior year, and we're going to book that full grant receivable here. And then as I briefly mentioned, subscription busing is kind of on hold right now because of COVID. So we didn't really have to look much further to see if any other receivables were being accounted for. And then, I'm sorry, I do want to just slightly backtrack to our budget column. Similar to how we tied that out and made sure that was reasonable on the expenditure side, I just want to do the same on the revenue side. So if we look at a snapshot of Melbourne's budget, their total operating revenue is 97 million, but we also want to take out those budgeted withdrawals that we saw previously for the reserves. There was the 800 coming out for capital, 250 coming out for maintenance, and they also had budgeted fund balance of the 2.2 million. So once we adjust for those, we come to the exact balance that's currently in CSI. So feeling reasonable, feeling good about that column. We know we took account for the receivables that we needed to, not a huge amount of adjustments here like we were looking in at the expenditure side, but that's basically our gist of analyzing revenue. Cheryl, anything to add on this one? I know briefly before when we were talking about this, we knew this was kind of the area that maybe we didn't have too much to talk about, but if you wanted to pop in and say anything, feel free.
And not a lot to add. The amount that we're showing as a deficit, as Kathy said, is because we typically have subscription busing and facility usage that didn't take place this year. Probably the other part that's not shown here is we usually have revenues that come in above our budget that we're not seeing this year, but we also had a number of expenditures that didn't take place this year, like our lunch program. We usually have lunch aids and we didn't have lunch this year. So that those offset the other revenues, but not really a lot with the revenues.
Another point that Cheryl brought up, and Caitlin, by the way, I'm going to say, because I'm left-handed and I think a little differently, I thought we already went through revenue. I'm so intensely engrossed in this. So anyway, the employee health benefit contributions, Cheryl brought that up. You know, The best way to do this is a meeting of the minds. You know, we ask some thought-provoking questions and Cheryl offers us some information and together we get to something. In the past, I remember sitting down with the BA who said, okay, I estimated my fund balance, and he did it completely differently from the way I would do it, because we do all tend to look at things a little bit differently. And at the end of the day, we came close to the same number. And I said, it doesn't matter how you get there as long as you get there. So we went 2 different paths and we ended up the same. But depending on what you do in your school district, I don't know how often you transfer over the employee health benefit contributions. Some people do it monthly, some people do it quarterly, some people do it annually. But if you have a significant amount of money sitting in payroll agency that needs to come over, you're going to want to do that and consider that in your calculation for June 30th.
Okay, so we are going to round out to this part of the presentation with step 4, which is where we're basically going to put everything we just did together in one summary. So after we looked at the reserves, the expenditures, and the revenue, it's time to start to make some determinations. So a little bit later on in the presentation, Kathy's going to talk about how the allowable percentage that we're all used to being at 2% has now increased to up to 4%, so you can use any percentage within that window. You also want to take a look at your subsequent year budget to see if any fund balance is being utilized there, and then also to make a determination on where your reserves are going to be projected, if parts of it need to be replenished, just to start thinking about any type of amounts that need to go back to any of your reserves. All right, so flip back to our Excel, and I know this spreadsheet itself looks a little bit more intense than our other tabs, but it's really just pulling information from the other 3 that we put together. So we're obviously starting with our beginning balance, and then we're pulling our estimated expenditures that we already went over with our expenditure tab, and then we're pulling our estimated revenues that came from our revenue tab, and we're ending with a projected estimated fund balance of $27 million. So in order to do the next part of the calculation, we're going to take that 81 million of expenditures, which is why I mentioned when we were on the expenditure tab how important it is to really get that a good number in your actual column. So we're going to take our expenditures, and Milburn has decided that for this purpose they want to utilize increasing their allowable percentage up to 4%. So 4% of the 81 million comes to the 3.2 million. And then from that number, we're also allowed to do some other adjustments to it for extraordinary aid and non-public, which would be the excess amount over what was budgeted for those grant awards. So again, we're using the fiscal year 20 grant award, which was the $882,000. Milburn had budgeted $500,000 for extraordinary aid. So the difference of $382,000 is an allowable adjustment. And then similarly with non-public transportation aid, Milburn did not budget anything. So the full fiscal year 20 grant award, because we're using that as an estimate, gets to be the allowable adjustment here. So the 3.2 plus these 2 adjustments brings us to a maximum unassigned fund balance of 3.6. So this is kind of like bucket A that I like to think of. This is my maximum amount that I can have in unassigned. Let me see where I'm actually ending up. So if we take our 27 million, which is our estimated fund balance from up top, we know that 12 million is going to be encumbrances, which we already saw on our expenditure tab. We're going to take a look at our 22 budget, which I have a little, oh, I might have scrolled a little too far. A little snapshot over here. So we know in fiscal year 22, Milburn is planning on using 2.372 million of budgeted fund balance. So we want to make sure that we're incorporating that. So we know that's going to be a future use of fund balance. And then right now, based on our reserve tab, we feel that capital reserve will be ending at 3.6, maintenance reserve will be ending at 1.6, and emergency reserve was untouched and remaining at 450,000. So after we take into account all of this out of the 27 million, we're left with 6.8. But bucket A is really telling us that our maximum unassigned is the 3.6. So what are we going to do with that difference between the 2 amounts? So typically Milburn has had excess surplus of about 2.242 million for the last several years. And in conversations with Cheryl, she really wanted to keep that excess surplus consistent. So we decided to designate that same amount towards excess surplus, which really left the difference that we were talking about at 960,000. So that's the amount that is currently over the maximum that she could have in unassigned and that she could decide to replenish her reserves with. So if I flip back here, these are the areas that I had originally left yellow. So again, in conversation with Cheryl, we took a look at what are some future goals that we want to use the reserve money for, any projects that are in the pipeline. You can see that she's really utilizing both reserves. So she decided that she wanted to dump half into each reserve. So of the 960, we decided that we were going to put 480,000 back into both of those reserves. So if I do that adjustment now, that will obviously change our projected balance of the reserves. And if we go back to our summary tab, we want this really to be 0 so that we know that we're accounting for everything that was over the maximum unassigned. We put a portion back into as designated for excess surplus, and then a portion to replenish our reserves with. And that is how we project fund balance. Cheryl, Kathy, anything to add?
Yes, I do. Just hold on 1 second, please.
Sure. Maybe we'll jump to Cheryl. Anything to add?
The only thing I'll add, and Kathy maybe will be bringing this up, come June, before you have all of your final numbers, you need to have a board resolution indicating how much money you want to put into reserve. So I know that Nisivoccia has always recommended to do a resolution of an up to amount so that you have some flexibility for after you do all of these calculations, that you still have room to decide what you want to put into those specific reserve accounts. So as we get close to June, not that far off at this point, we'll go ahead and we'll do a resolution. I'll do a calculation, have an estimate of where I think we're going to end up, and then I bump that up a little bit more and ask the board to approve an amount up to wherever we are at that point. So I do have the flexibility when the audit's done to make that final determination of how much to put back into those accounts. And all of that I do with our finance committee. It's not something that I'm doing unilaterally. I want to be sure that the board is in support of it. So even though they do that resolution in June, I'm meeting with them as the audit's taking place to make that final determination of how much we're putting into those reserve accounts.
Cheryl and Caitlin and Kathy, we do have a question on if they, one of the items, I guess, Cheryl, is that you like to keep your excess surplus stable from year to year. And can we discuss the importance as to why that would want to be stable and not fluctuate largely? And why you'd like to see it keep on a stable keel and what its importance is?
Sure. So the excess surplus is our budgeted fund balance going into the next, not the next year's budget, but 2 years budgets out. So as we're finishing the 2021 year, the amount that we would put into excess surplus is designated for the 22-23 budget. Did I get that right? I'm losing track of my years. The board had designated around, actually it was 1842 up until 2 years ago when they decided to bump it up. That's a revenue going into your future year budgets. And if you cannot continue to maintain that amount and you still have your same, or you had increasing expenditures, you need to find a different way to bring those revenues in. So it's almost, once you determine a dollar amount, you're committed to that amount going forward, because again, it's a revenue source that you're going to have to make up somewhere else if you don't continue to maintain an excess at the similar level. So we always do try to keep it. It's like I said, we used to be at 1,842,000. It was just a random number that our board had picked even before I was part of Milburn. We had increasing enrollments that we were projecting over the past couple of years. And so my finance committee decided, let's bump that up a little bit to support the enrollments. And again, we're trying to keep it balanced and flat now going forward, because otherwise we have to make it up somewhere else.
So it's for the stability purposes.
I have a few comments. So as the auditor, we take great responsibility. And, out of a 200-page CAFR, if, some of you are my clients, you've heard what I say, and I had, developed financial highlights because I never wanted to go into a meeting with the board and not know absolutely positively what I was talking about. You're managing so many different school districts, you can get confused. So when I review the audit report, I put the comparison of fund balance last year to this year, which components of fund balance changed, why did it change? And I discussed with the BA, do we need all of this? Is it confusing? Do we make it a little different? Sometimes I would show the fund balance and build up to the 27 million. I've had school districts that say, please, please, please don't put 27 million on there. I don't want to draw the public's attention to that. So everything's appearances. So I said, all right, let's start with 27 and let's take out all the committed funds. And I use that term committed loosely, meaning we budgeted it next year. This is being utilized for this, that, and whatever. And you get down to what that 2%, 4% plus the add-on is. And that's more palatable. So where they see 20 million at the top and you take out all the things that have been designated for something, and you come down to that amount that you're allowed to manage. I do see a question in the chat that says, what can excess surplus be used for? It's an excellent question. As Cheryl said, when you're having, we have districts that do the resolution in June a little bit differently. So you can say up to X amount in capital reserve, up to X amount. And even if we're projecting that there's going to be 960,000, you can still say up to $1 million in maintenance, up to $1 million in capital, even though you don't think you're going to reach that number. You could even go higher than that. Cheryl could do $1.5 million in each, because maybe in a month or two, she's going to change her mind and say, I don't want to split it. I want to put it all somewhere. But again, she has ongoing conversations with finance and her board. And so they have their trajectory. They know where they're going. They know what they're doing. But some people might have like a last minute change of thought, and you leave yourself that flexibility. So what happens is perhaps you did a resolution, the board passed a resolution for $1 million and you end up with 1.5 million. So what happens? That becomes excess surplus. It's not the end of the world. It just means that you have to budget it in the next budget, which is 2 years after the balance sheet, fiscal year ending, and you can appropriate it for increase in capital reserve. So where you missed it for June of 21, it will be in there in June of 23, but it's a 2-year wait. It's not the end of the world, but doesn't mean that it's a lost opportunity. So excess surplus just means you have to include it in that. We're going to now talk about 22-23's budget as a revenue, and it can be offset by anything. And there have been districts that have said, oh, I've got this whirlwind, I've got this great amount of money that I can use, and they use it for operations. And I think we've all been talking enough over the course of time to say that don't ever use it for operations. Use it for one-time items, use it for deposit to capital reserve, deposit to maintenance reserve, maybe transfer to capital projects fund for a project that you're doing, but certainly not to meet the operational demands, because you'll find yourself at a shortfall in a very quick amount of time.
Kathy, we have another question that has come up, and I guess it's the difference between the 2% and the 4%. So I don't know if you want to address it or if you want me to address the 2%.
Well, we're going into that next. I think what I wanted to do, because there was a question about the beginning of the presentation, because some people got on a little bit later, but the first thing that Caitlin went over was the reserve tab. Caitlin, can you switch over to that?
Yeah.
So the beginning of her journey with Cheryl was to go back and look at the reserves that you have. And I'll do a real quick summation of what Caitlin did an extraordinary job doing, is to make sure that, if you're doing a little Excel spreadsheet like this, that you're making sure that the numbers in your board secretary's report do match your audit. So Caitlin went back to the audit and said yes. She looked at the subsequent budget. So we're looking at June of 21. So we looked at the 21-22 budget to see if there were any budgeted withdrawals, and there were. And then we looked through the minutes for any transfers authorized by the board. And so Milburn withdrew $392,000 to cover the shortfall in state aid that they faced. And then they had another board approved withdrawal for a project that came up. Another important topic, because Caitlin was very comprehensive with Cheryl, the two of them, talking about what ifs. When you have a project and it's going to be wrapped up, you should really consider if there are extra funds there. In this case, through conversation, Cheryl determined that there could be $61,000 left on one of her projects that were withdrawn from capital reserve and $59,000 from maintenance. That's not a big amount, but you could have projects that are much larger. The bids could come in much lower. And so those unexpended funds could be significant enough that they could skew your rationale for what you want to deposit and what you want your year-end balance to be. And then in the items that are highlighted in yellow was after going through the whole scenario and determining what fund balance might be, what the different requirements are, what the encumbrances are, what the projected expenditures are, what the projected 2 or 4% would be. And in this case, Cheryl is thinking of going to the 4%. Then this is the amount of money that was left over to allocate. And again, you could do it in any way, shape, or form. It should be part of your resolution. You want to make sure your June resolution captures at least that much. And that's where we began. And then I'm not sure how late people were, but the next step, Caitlin does think like me a little bit. I always go to the back and work to the front because those are the smaller pieces that lead up to the bigger one. So reviewing your expenditures, making sure that the budget ties to the budget, making sure that your encumbrances, your reports match each other. We stated that in Milburn, they do a good job of keeping a handle on their payroll purchase order, which is one of the biggest obvious purchase orders in the district. And so the estimate at the bottom, because this is March 31st information, was that they were going to liquidate and spend at least $20 million before June 30th. And so that factored into their calculation. And then just real quickly for the recap is revenue. We didn't have any serious revenues to consider. I just said that one that Cheryl pointed out was she has 1/4 of her employee health contributions that she hasn't moved over yet. And we had that conversation and she said, but I have offsetting expenses to go with. So that's not going to net any bottom line. It's going to flush itself out. So again, we said different districts could have revenues that would be significant between the window of March and June. And that is if you're billing tuitions, if you're billing for busing, if you're billing for any other services, that all of that has been captured and that you know what's receivable at the end of the year. And then she went to the front tab, estimated fund balance, and put all the pictures together. Now, this is a little bit different than we've presented calculating excess surplus, and it does seem a little overwhelming, but I said to Caitlin, after you go through this process, could you give VAs a little bit of an idea of how to approach this? In what step? What documents do you need? So in the PowerPoint, Caitlin indicated that. So the idea here is, it is very complicated. I know I tried doing the excess surplus computation and I said, oh, how hard is it? You know, you look at your revenue report, are you over, under revenue? You look at the expenses, you know, what's going to be left in there, and you make magic. But I did that one time very quickly and I was off. And I was off by more than I felt comfortable being off. And so it's really worth going through all the details. But here you get the idea of what information you need to gather. And at Nisivoccia, each and every one of us loves having the conversation with our school districts to help guide you and just to talk to you, because sometimes something that we say rings a bell or clicks something, and we get to the best number for you. So as much as we like you to be aware, definitely here to have those conversations with you and help you in this process. So if anybody has any questions there, we're going to go into the.
There's one other, we're going to make this available, right? We are recording the presentation, so you can rewatch the presentation, and we will make available the slides and any Excel files so that anyone can get them from us. Just let us know and we can make them available.
Yeah, absolutely. So then the big buzz for this year is.
Sorry, Kathy, I'm just going to stop share real quick, and Katie's going to take over the rest of the PowerPoint for your portion.
Okay. Yeah, we always put in the slide about transfers because they're critical to the numbers that we're looking at, and we're always looking out for you in this period leading up to June, that you know what you need county approval for. So from any line item over 10% to any administrative line over 10%, and all transfers to capital outlay besides equipment, outside of equipment, have to be approved by the county. So occasionally we see where they weren't submitted to the county, and we just like to give you this information, remind you at the point in time where you still have an opportunity to have those approved. Next slide, Katie. Okay, so Senate Bill 2691, increasing the undesignated, unreserved net position fund balance, going from 2% to 4%. And my initial reaction was, why in the world would you want to do that? Why would you want to do that? You're just setting yourself up for disaster, because you have to pay attention. There's a lot of things going on in the business office, a lot of things that you're dealing with. So to remember you're forecasting what you're doing. My opinion was, why would you go up to 4% when it's only for 2 years? Well, a month has passed, or 2, and I'm starting to see the reason, because throughout the pandemic, school districts have experienced different results. And I know one district I talked to said, I'm going to have so much money left over, and I really don't want to show the public that we have $3 million. So by going up to 4%, it's not showing as excess or deposits to reserves. But what it's going to do, and Mon came in to tell me that there was a presentation to talk about what you can do with that money. You can do 4% for 2021 and for 21-22. So in 22-23, you're going to have to make sure that you can bring that back down to 2% by June of 23. You can, like we said, if you have more excess fund balance in 22, you can put it into your 24 budget. You can, of course, transfer into reserves next year if it falls in. And you can use it for any one-time items. I think we pretty much sing that song time after time, saying that when you have this influx of money, that you want to be very careful to make sure that it's out of there by the next year. So even with that, when we're going through and we're calculating excess surplus, you are permitted to go above the 2% and 4% for extraordinary aid and non-public transportation aid. And the board is able to utilize that money for any purpose by board resolution. A lot of districts don't do that. Some districts do it immediately. Perhaps they have special ed tuition or special ed costs that they didn't foresee, and so they will do that. get you into trouble when you're going into your next year's budget and you're putting everything in the budget software, and all of a sudden the software is telling you that you have to appropriate additional fund balance. So throughout this whole process, we always ask that you reach out to us because we will guide you. We have that conversation back and forth so that we each understand each other and that we can help you not end up in a situation that you don't want to be in. So what do we have? All right, so again, each district has its own opinion. I have heard some districts say that they don't see the need for an emergency reserve in recent years with security and the pandemic. Other districts felt it was a good mechanism to use. Some people think maintenance is not very usable, accessible by their districts, and Cheryl just said to you that they're using it as a major mechanism in Melbourne. The transfer has to be done before June 30th. And again, going through this process, it's not exact. There are some assumptions that are being made, some estimates. And so it's better to err on the side of caution and have the board approve larger deposits than you think they will be, so that you have that flexibility. Next slide. Okay, so capital reserve is for capital projects that are included in the long-range facilities plan. In years past, that has been very difficult for us to determine. That long-range plan looked like some hieroglyphic, but we would take a look at it and we would see what the local share of the projects was. This has now become a new initiative to get the long-range plan back into better shape over the last year or two. And so we always want to make sure that when you're withdrawing money for capital reserve, that you actually have the project in your long-range plan. If it's not there, then you can amend the long-range plan to include it. So let me see what this is saying. Okay, so you can also put money into capital reserve by a special question to the voters. And then however you do it, the ending balance in the capital reserve cannot exceed the local cost of the uncompleted capital projects in the long-range facilities plan. Withdrawals may be made by board resolution. And again, that should be reviewed at the school and with the attorney to make sure or the architect and project managers to see what the local share minus the excess costs are. But you can do it by board resolution, again, as long as the project.
Hey, Kath, can you just lean a little forward? I think it's
Yes.
getting hard to see. Thank you.
Thank you.
That's all right. Sorry.
Yep. So we see a board resolution, and that should go through this calculation of what the local share less excess costs are to make sure that it's allowable. And then if you have an SDA grant, which we don't have anymore, it would have to be transferred to the capital projects fund. I guess I'll pause here for a minute. Have districts doing a number of different things. So I will see districts withdraw money, transfer to capital projects fund for various projects. Some just do it through capital outlay the projects. And my opinion, and I think the opinion of most of my partners here, is that if you think that project is not going to get done in 1 year, you always have the option of moving it over to capital projects fund, even though it may only be financed by a withdrawal from capital reserve, because it gives you the window to see When you have it in capital outlay, it's muddled by the other capital outlay items. And so we always say it should be on a particular line item. And this is where Caitlin and Cheryl went through and they were looking at it together to see what projects were in there and what the balance is. But when it's in subfund 12, you have to look. You have to dig into the detail. When you move it over to Fund 30, it's got its own account, it's got its own page in the audit, and the same rules apply. When the project is deemed complete, then whatever isn't spent on that project goes back to capital reserve. So for me, I think that's a good place to put it. You know, if you think you're going to get it done in a short window of time, you can put in capital outlay. Again, these are the other details on what the withdrawals are limited to, and we really don't make those determinations. We look for the board approval. So you can do it by board resolution or through the budget process. Maintenance reserve. I know I go to Heidi every year and I probably have it saved on my computer. What's the difference between maintenance and capital? Sometimes there are very fine gray lines. And so I have that on my computer. I shoot it over to the BA. We have a conversation as to whether something meets the maintenance or the capital. And if you need it to go one way, do we have enough of an argument to support handling it that way? So again, you're going to make sure that they are used for facilities, and it's to provide funds for anticipated expenditures to maintain your buildings. Okay, funds deposited by board resolution. Funds are withdrawn for maintenance account lines. And you can skip through that. We just like to put the whole thing. And then your limit, it has to be budgeted in 261. When the funds are withdrawn, you have to make sure that any unexpended funds are returned to the maintenance reserve account. And the maximum on the maintenance reserve is 4% of the replacement cost of the current year school district facilities from the M1. So Cheryl, I don't know if you want to interject here again. I know a lot of clients have asked me. I don't understand the mechanics of the maintenance reserve because I never spend my maintenance budget. And so it's just a revolving number. So when you use your maintenance reserve, I think you may have said it, but you might want to say it again.
So we use it for a couple different areas. As I said, we went through this whole program with identifying capital and maintenance projects. We had a new buildings and grounds person who was moving forward a lot of things. And so we wanted to have funds available for him as he was able to get to projects. So it was above and beyond what was in the original budget for maintenance projects that we had in that maintenance reserve. This year, we of course were able to use it for the Boston State aid that we had last June. And so we were able to take advantage there, but we're really using it for as projects come up. We have been using it as a revenue source in following year's budget. So when Caitlin had gone through, she had shown 250,000 that was budgeted. We've been doing that the past couple of years where we've been helping to offset it within the budget through our maintenance reserve as a revenue coming in. So you can do that at budget time. And we do that, it fluctuates from year to year based on the number of projects that we think we could get to.
Excellent.
Hey, Kat, I have a question.
Sure.
What are our thoughts on waiting till the end of the year and making one capital reserve transfer based on an actual project expenditure rather than as the projects are happening and then transferring back the unused funds? If general funds are available to cover some of those costs, is it better to transfer from cap reserve and make a new deposit by June 30th? Sort of a loaded question, but I'm sure you're reading it too off the screen.
Yes, I am. It's a big question.
It's a big question, so. I'm assuming when they're saying transferring, are they talking about transferring to the capital projects fund? I'm thinking that's waiting until the end of the year.
So I'm not certain if the question is, some of our school districts have 10, 12 projects that are going on in the capital projects fund. And so they're finishing up at different stages of time. And, you know, as we come in to do the audit and we're looking for the expected completion dates and the revised completion dates of those projects, we do use a little bit of ease in saying, okay, are you going to close these out and move these back to capital reserve in this fiscal year, or are you going to let them go? Because sometimes the BA is looking at the balances and saying, you know, I'm going to cancel these projects are done, I'm going to let that money go back, and then the next year they know they're going to have a couple others that are going to close out and go back, and that keeps some level of continuity. I'm not certain if I answered the question correctly.
Yeah, I'm not sure.
So then the final, if general funds are available to cover some or all of those costs, is it better to transfer as budgeted from capital reserve and then make a new deposit? Yes, I believe it is, because I'm thinking that those are different projects that, you know, you should be closing out the old and creating a deposit for new monies. And again, if I am not answering it correctly, certainly reach out to one of us individually or the partner on the account, and we'd be more than happy to talk about the details with you.
Yep.
And that's that. So we were talking about tuition reserve, and some districts have a sending receiving relationship, and you know, when you're sending your high school students to another district, that cost is large. And so when those tuition adjustments come through 2 years later, it can wreak havoc. And so the state developed the tuition reserve. It's 10% of the estimated annual contract that you can set aside in a reserve for a year when the tuition adjustments come in. And of course, the state is certifying those rates, and that's how long it takes for them to be certified for 2 years prior. And if there were any remaining balance, it would have to be budgeted for tax relief. So I have one of my clients that has a tuition reserve, and each year, you know, it's a lot of responsibility to make sure that there is excess surplus and enough to replenish the tuition reserve. But it's very important when you are in a sending receiving relationship. I think that most boards should try to get to that level where they can establish that reserve. Emergency reserve, I think we've talked about this. You know, when it was created a long time ago, it sounded like, wow, we do have emergencies come up. But every single expense that ever sounded like an emergency, looked like an emergency, walked and talked like an emergency, was always disallowed by the department. So we were definitely discouraging people from putting money in it because you could never get it out. And then again, as I said earlier, they expanded that to include security. And then over the past year, they expanded it to include expenses for emergency expenses for as a result of COVID. So again, the maximum is the greater of 250,000 or 1% of your general fund budget, not to exceed 1 million. Deposits can be made anytime by board resolution. Withdrawals require commissioner approval, unless it's necessary to meet an increase in total health care costs that's got to be now 10, 15 years ago that was relevant, or if it's included in the original budget. And with that, hope that what we have been able to present to you today has made some sense. If anybody has any questions or thoughts that they would like to share, we certainly appreciate Cheryl putting herself out there and, you know, just going through the thought process. It was Caitlin, it was Cheryl, and, you know, I always inject myself into it saying, you know, here we are in March, but we need to see how we did in April and where we think we're going to be in June, but there's a lot to look at and a lot to be considered. And I always think that corroboration and conversation yields a lot of wonderful things. And we've always had that. So. Val, do you have anything to add?
I have no other adds other than one comment that Heidi had wanted to get us out for, I guess, when you're going for a capital project. She just wanted to remind everybody that to make sure you get your state facilities approval for any capital project, and that projects canceled should also be done by board resolution, so that when you're closing out and canceling projects, just a reminder to do your cancellations by resolution.
Okay.
Nice, thank you.
We do have extra time if anyone wants to ask any other questions. Otherwise, just so you all know, you'll be receiving the recording of today's roundtable. And as long as we can send, which I think we will, the PowerPoint and the Excel sheet, you'll all get a copy of that today or tomorrow.
And as always, if you have questions for your district specific, please just reach out to us. We will always answer specific client questions once you get the information.
And thank you all for your participation. You know, we decided a year ago that we wanted to do roundtable discussions because there are important topics that come up from time to time. There are important topics that are relevant year after year. You know, if you have any input with any topic that we talk about that we can put in our little file for future programs, we'd be happy to do that. I believe Katie is going to send a survey, still always asking you what are topics you want to hear about. And so we appreciate that. And we know we were in conflict with the Morris County ASBO meeting this morning, and I see we have 64 participants, 62. And really thank you all for making this such a wonderful opportunity to you know, talk together, walk together, and talk about the things that we face together every day. So thank you so much, and I hope you have a beautiful rest of this beautiful day.
Great. Have a great day, everyone.
Yeah.
Thank you.
Thank you.